Good afternoon, everyone. Welcome to this professional lunch here at the Foreign Correspondents Club of Japan. I'm Anthony Rowley, and I shall act as moderator today, although I regard myself as being very ill-qualified to do that because my knowledge of cryptocurrencies, I must admit, is probably the lowest in the room here. But it's my pleasure to introduce today's guest speaker, who's seated to my right, who is Mr. Mike Belshe. He is the CEO and co-founder of BitGo, which is a securities platform for digital currencies. He's a leading expert, dare I say it, on the cryptic subject of cryptocurrencies. And cryptocurrencies are very much in the news at present, as you know, often not in a very flattering light. It's either because their prices, that of Bitcoin in particular, I think, are fluctuating wildly, or because yet another crypto coin heist has hit the headlines. The most recent case, obviously, was the one just last month when hackers stole about $530 million equivalent from the Tokyo-based exchange CoinCheck, which was around the same amount that was taken from cryptocurrency exchange Mt. Gox, I think it's Mt. Gox, in 2014. So I think the most important question for people like myself, who still regard cryptocurrencies as being something of a black box, is how much of a future they have when the security threats affecting them are apparently so great, and while their price volatility also remains great. And yet Japan appears to have embraced cryptocurrencies. Leading retailers such as Big Camera and the aviation group Peach Aviation, to name just but two, have recognized Bitcoin and others as legitimate forms of payment. And then there's the question of blockchain technologies and their role in relation to cryptocurrencies and in other areas. Fortunately, we have someone today who's very well qualified to look inside these black boxes and to help us understand what is going on. Mr. Belshe is a veteran technologist who helped create Google Chrome and invented the protocols at BitGo, whose customers include the world's largest cryptocurrency exchanges and financial institutions that conduct more than $12 billion in transactions each month. Mr. Belshe also helped found the Cryptocurrency Security Standard, a security standard for cryptocurrencies, obviously, which has been embraced by consultancies Deloitte and PricewaterhouseCoopers, among other people. He's visiting Japan ahead of the formal launch of his company's services here, which will take place next month. And he will talk about cryptocurrencies and blockchain situation in the United States, as well as in Japan and elsewhere. He says that his speech will have a slightly technical bias, but don't worry. If you want to ask the kind of stupid questions that I've been asking earlier, feel free, because he's very welcome to act, very happy to act as a mentor and fill gaps in our knowledge. So let me stop there and let me ask you to join me in welcoming our speaker. If you have an iPhone or a K-Tide Denmark, please switch it off or put it on manner mode as a courtesy to our guests. So please welcome our speaker.
All right, thank you very much. Really glad to be here. All right, I have a presentation, which is one that we've been using in talking with a number of potential clients. We spoke with the FSA this week a little bit and made this presentation as well. It is certainly geared towards people that have a strong familiarity with Bitcoin, digital currencies, etc. So real quick, who has a strong familiarity with digital currencies here? A little bit. Anybody have any Bitcoin? Somebody else. All right, good. So I'm going to try to keep it fairly high level, but I'm happy to go deep if you've got questions. It is an abstract notion, digital currencies. It's different from anything we've seen. You may have a number of questions about how does it work? Is it real? As Anthony mentioned, you've probably heard about it for all the wrong reasons, money laundering or thefts or whatnot. But we think it does have some utility. So anyway, I'll talk about this. I'll do some discussion topics here, and then feel free to ask lots of questions. And my screen just timed out. All right. I think we already talked a little bit about me, so I won't do it much more. Been working at BitGo for about since 2013, about 5 years now. Here's some of what I was hoping to talk about today. We'll talk about what BitGo does, some of the key areas that we help our clients reduce risk, and then a little bit about some cryptocurrency standards. I think, you know, we didn't come here because of CoinCheck. Actually, we've been building up our presence here for at least 6 months now. We've had clients here in Japan for longer than that. But whenever you have another one of these breaches, it's an important time to take a look back and see, like, okay, how do we make this stop happening? Yeah. All right. About BitGo. So as Anthony mentioned, we've been securing people's cryptocurrency. We're a business-to-business company. About $12 billion of transactions flow through our systems monthly at this point. Adoption has been fast. We support a number of currencies. Although we cut our teeth on the Bitcoin side, if you haven't heard of Ethereum or Litecoin or Ripple, we support many of those currencies as well. Recently, we announced the pending acquisition of Kingdom Trust. Kingdom Trust is a state-chartered trust bank in South Dakota. We acquired that company as part of a growth area, which is, although a couple of years ago, cryptocurrencies were isolated to just enthusiasts and those ready to go and tackle the brave world of digital exchanges. These days, there is a tremendous move from hedge funds, asset managers, wealth management funds, to also have exposure into digital currencies. These folks have never had to hold an asset before. Digital currencies are fantastic because they give you the power to hold your own keys, and they are also completely terrifying because you have the power to hold your own keys. So asset managers in particular, they don't know how to secure things. They shouldn't have to. I'm not trying to criticize in any way. Personally, I would not want to have full custody of $100 million either. I would much rather have that be in a bank. So the purpose of acquiring Kingdom Trust is to start to build that foundation. Typically what we do is we started with a security-first approach. Just going back to kind of a personal story, how we got started, I became interested with Bitcoin, I don't know, in 2012, maybe 2011. And I bought some myself. I helped my friends buy it. Most of them had a little less technical expertise than I did, so I became the one tapped to hold that Bitcoin. So I used state-of-the-art practices at the time. I had a laptop securely stored underneath my couch at home. I had backup keys in the laundry room, and that was fine for a little while, but the value of that continued to grow. And when it reached $25 million, I started to be afraid I was going to lose my friend's money. I was afraid of two things, actually. One was malware, and from my background in security at Chrome, I knew that the rate of growth in malware on the internet was just, you know, through the roof, and that trend remains to this day. I was also afraid of simpler things, like my kids spilling Coke on the machine and losing all the Bitcoins. When you do take custody of digital assets, you do have to think about all of the elements of security, of how you keep it safe. Anyway, with BitGo, security is our first thing that we work on. Simplicity comes second, although we always make trade-offs to make sure that it's secure before easy to use. Once you do get through those hurdles of setting up your account properly, provisioning your keys and your wallets, it looks pretty simple. It looks kind of like a bank account with sends and receives, and it's not so hard. Lastly, people have been coming to us because scalability has been an increasing issue. There's been tremendous demand for transactions on chain, and people seek out some of our wallets, which we host a number of the largest exchanges around the world. In India, we've got Unocoin, we've got BigBank Japan here, Korea, US, Bitstamp in Europe. All of these folks are using our software, and many of them have millions of addresses, millions of customers on the platform. Some of our customers. All right. How do we reduce risk? So security, and this is not specific to digital security, but it's often about removing single points of failure. So anywhere where you have a single vulnerability, you try to split it so that it'll require at least two breaches in order to break it. So with Bitcoin, we started out with a public and private key. Who's heard public and private key here before? All right, great. So we start out with a single public-private key pair that protects your Bitcoin. We implemented a system of multi-sig, which I'll go into in detail, splits it into two. Then you can take those two keys, you can split them across two users, two people. You can take those two people, put them in two different organizations. You can take those two organizations, you can put them in two different parts of the world, two different jurisdictions, two different geographies. All of these are ways of mitigating risk by removing single points of failure. So looking at single keys, initially Bitcoin emerged, and part of why it emerged is because people wanted power of holding their own money. They didn't like the idea that other people can take it from them. And so it is very powerful, assuming you know how to do it right. As a user, you can hold your own money. You can hold $100, you can hold $100 million. It's all doable with digital currencies. But of course, doing so has some risks. Like I mentioned earlier, you can have malware on your machine. If you use a weak password, somebody might compromise that. You can lose your password. Your hard disk can crash. You might die. That's a tragic thing, but one that I think most folks in the digital currency space haven't even started to think about. If you encrypted your keys in such a way that only you know it, you know what happens should you pass. So then people said, well, wait a minute, why don't we take those keys, and instead of as users holding them, we'll hand them to some service. This is kind of like handing it to a bank. And we find some of the same attacks are still there. Like, services are also subject to having malware. But services have other types of failures. They could be hacked. They could have an inside job. You know, once you have a bank with hundreds of billions of dollars, you know, it gets pretty tempting for a group of employees to try to steal. They can go into fractional reserve. We mentioned Mt. Gox already. Mt. Gox did not have the money that it said it had. So anyway, services have a number of threats to the end users as well. By the way, does anyone know what Mt. Gox stands for?
Nope.
All right, let's hear it.
It was based on, as you know, the exchange for Magic, the Gathering, trading cards backed by this fellow. Oh, sorry, I don't want to use a microphone, but the fellow who set it up was Jeb Callis. Was that his name? I can't recall. Yeah, Caleb.
McCaleb.
And right. So there was a popular game trading card game called Magic the Gathering, and Mt. Gox was Magic Online something.
Magic the Gathering Online Exchange.
There you go. Yeah.
So what grew to be, by the time end of 2013, the largest exchange for digital currencies in the world, hundreds of millions of dollars in assets, originated out of a trading card site. So one of the challenges with security here is that when they started, they were building a security platform for trading cards. And then they decided to start trading Bitcoin, which initially was worth pennies. So that doesn't need a lot of security. It's only worth pennies. But those pennies turned into dollars, turned into hundreds of dollars, and then by the end of 2013, thousands of dollars, and hundreds of millions of dollars were stored there. But they had built a system that had a security model designed for trading cards. And so once you kind of think about it that way, it's easy to see how it could have collapsed. And when we think about services holding keys, you need to think about, is a service that I'm trusting with my digital currency designed for the level of security of the value of this asset? All right, so back with multi-signature, what we do is we actually combine these two things. And it turns out that if the user holds a key and the service holds a key, you can knock out most of these risk vectors. Malware would need to perpetrate two different machines. Insider theft is difficult because you'd have to do two different organizations that have to be compromised. So it's a very strong foundation. It's what we build everything on top of with BitGo. One challenge for the industry is still phishing. At the end of the day, as humans, we like to have interfaces which are relatively simple. Current state of the art is roughly username, passwords, two-factor authentication. Sometimes people use biometrics. But if those are compromised by a phisher, you can still lose your money. Challenge for the industry, not just digital currencies. All right, so multi-sig. With multi-signature, you protect a wallet with multiple keys, which is the great thing. You can have any number of keys. You can use 3, you can use 7, you can use 10. Most folks at BitGo use what's called a 2 out of 3 model. It means that there's 3 keys, of which 2 of them are required in order to enable a transaction. So the benefit here is you're always bringing together multiple things, two keys. and you always have a backup. So there's a BitGo key, which is involved in co-signing and enforcing policies and rules. A customer key has one key for transacting. They're always part of the transaction. And then the customer holds a third key, which is a backup. Turns out that customers can and will lose keys, so we always need that backup. But if everything goes well, hopefully that backup is never used. The second area that BitGo helps our clients with is something called hot and cold storage. Anyone here familiar with hot and cold? All right, good. We have some experts here. It's great. So with single key systems, hot and cold is very easy to define if your keys are stored online and perhaps you're dealing with 24/7, real-time transactions. Obviously, you're going to have a key online. That is a hot wallet, meaning the key is somehow accessible by a computer that's probably connected to the internet. As such, it has a vulnerability to anyone that's on the internet. You can't deny it. A cold wallet is the notion that you take that key and you put it on a machine that is never connected to the internet, is always air-gapped, and therefore not vulnerable to internet attack. It is ironic that here we have the greatest kind of money the world has ever seen, and it's digital, and yet in order to protect it, yes, you need to take it offline. But that's best practice. Now with multi-signature, you get a third variant here. You can have one of the keys that's hot, you can have one of the keys that's cold, and it gives you a blend. We call this a warm wallet, and it allows you to have a wallet which has a combination of properties both from cold and hot. Now in general, when we're talking with our customers, we're using a set of wallets to protect funds. And you may have a hot wallet, which is used in kind of your daily transactions or your daily float. That may have $5 to $10 million in it, not a huge amount of money. You might use a warm wallet for funds that you need to access more on a weekly type of basis, and then you may have cold wallets or even a set of cold wallets for really the majority of the assets. Most of the exchanges are operating this way, with at least a hot and a cold. The overall architecture depends on the client, what their policies and procedures are, what their needs for compliance are, the amount of asset they hold. Some of our largest clients today are actually designing for a future of trillions of dollars of asset, and they're getting to a very complicated architecture of hot, warm, and cold storage. All right. Checks and balances. This is a system that we've created at BitGo, and being a co-signer on transactions is something that we are not used to with the traditional banking industry. So when you put your funds on deposit at a bank or you give it to your broker, you expect that they hold it. And we've got decades and centuries of practice with how those institutions have layered security and protect your funds. But at the end of the day, if you chose the wrong bank, if you chose the wrong asset manager, your funds are 100% at risk if they should make a mistake. What we're doing with BitGo is we're creating a check, a cosigner, who has been configured with a set of rules, policies, procedures that must be enforced in order to make transactions happen. That cosigner also has visibility to the funds, so you have a way to see transparently, not just as BitGo's customer, but as the end user to that broker or bank or exchange. You can see the assets are really there. So we call this system a set of checks and balances. In this diagram, you've kind of got an end user. This might be somebody that's participating at CoinCheck or at BitFlyer. The exchange is kind of the red circle, and then BitGo. So the end user initially initiates a transaction by contacting their exchange, right? The exchange has the responsibility to verify that that end user has permission to make that transaction. Assuming the exchange decides to make the transaction, let's say this is a large amount of money, $50 million worth, right? I mean, this could be big. The exchange then sends that transaction over to BitGo. BitGo needs to verify, is this really the exchange making this request? Is it a hacker? Is this something else? We've got a set of policies and procedures. It could be, is the time of day correct? Is the amount of the transaction over the threshold for which we would expect? Has enough authorizations been given? We can call back the exchange, verify that this needs to happen. We can do voice or video checks. But then the really powerful portion of this diagram is that, and we use this in the US now for the largest hedge funds that are securing literally hundreds of millions of dollars. BitGo can call back to the end user, that hedge fund, and verify again that he really did desire this transaction to happen. So there's nothing in the banking system quite like this, where you have two independent institutions that can both independently verify that end user, and it creates a very strong system of security. Now, unfortunately, this isn't used in a lot of places around the world. It wasn't used at CoinCheck, so we can talk about that a little bit. All right, state of digital security. I think it's not fantastic. As long as we're continuing to have failures, like what happened at CoinCheck, it's going to be difficult to make this industry really grow. I'm realizing I skipped a slide here somehow. I'm not sure how that happened. But you can read just from the headlines, right, that obviously we erode consumer confidence. It's difficult to create businesses when the funds are lost at the bottommost layer. I'm going to try to find that slide. Hold on. There it is. So what we're really building in the industry right now is financial services for digital currencies. And there's a process going on where many different types of traditional assets are being digitized. Through Royal Mint Gold, BitGo helped UK government create a digitized form of gold. It looks a lot like Bitcoin, but unlike Bitcoin, it's 100% backed by gold. One token on their chain is 1 gram of gold that's stored, vaulted in the Royal Mint. But there's other things going on. You've heard of ICOs, which is creating digital forms of securities. And then there's a number of efforts underway to be able to digitize property, shares of stock, etc. So all of these things, as they get digitized, we need to have at the fundamental layer safekeeping. I mean, that's what banks and trusts and custodians are supposed to do. But the layers above, and I think we have a lot of companies coming into that top layer, where they're either doing banking services or they're doing buy, sell, and trading and things like that. There's certainly a lot of desire to get into that, but if you don't have a really solid foundation at the bottom with security, one day you can wake up, you log in, and your balance is zero. So those businesses are going to continually have a very difficult time growing until we get the bottommost layer fixed. Kind of between security and commercialization here, we call it the verification layer, but it's it's record keeping, it's compliance. Obviously, governments have a very strong interest in ensuring that we're not laundering money. AML KYC is critical. Money's not landing in the hands of terrorists. Taxes are getting paid, reporting, etc. But also this keeps us safe. Like, we need to know who we're transacting with. We don't want to be taking on risk when we're moving between financial institutions either. So I think that's kind of where BitGo's at right now with the pending acquisition of Kingdom Trust. Overall, making these two bottommost layers really solid is going to enable the commercialization and then further expansion into mutual funds and ETFs and all kinds of products that we haven't even designed yet. Sorry, skip back. All right. So unfortunately, in terms of getting digital security to where it should be, the first thing we have to do is have best practices that we actually follow. And although we don't know everything that happened at CoinCheck, we do know, even from the limited data, that best security practices were not followed. For instance, hot and cold storage. We know that CoinCheck had a tremendous amount of money in a hot wallet. And this is a known industry. You should not do that. Second thing we also know is they weren't using multi-sig wallets. Although we can't guarantee that use of multi-sig wallets would have prevented this loss because we don't know exactly what happened, we do know that a hacker or thief would have had to compromise multiple machines as opposed to a single machine. So best practices certainly show this. And third thing is, any security auditor that took a look at their system would have highlighted those first two items. So I'm quite confident to say that if we just applied best practices, do a little bit of self-auditing, whether it's industry-led or whether it's regulated, we'd be in a much better space. So to that end, one of the things that BitGo's worked on for the last few years, and it dates all the way back to late 2014, I think we published the first version, 2015, is something we call the Cryptocurrency Security Standard. And what we noticed at the time is that in security, we have lots of standards in place. We have network security standards, we have operating system security standards, we have operational procedural standards, but there was nothing for cryptocurrencies, and given that it's only 10 years old, that's not too surprising. So we created one. We made it open source, and we sought industry feedback. Dozens of companies contributed, actually had a lot of really good support. We built a steering committee, which is comprised of many experts in the industry. Andreas Antonopoulos is well known globally. Eric Lombroso is one of the core developers of Bitcoin. I'm part of the steering committee. PwC, Deloitte have also helped here. So we have a standard that allows us to start saying what are the best practices and make that known. It covers a number of areas, fairly low level, boring technical stuff here. But the point is, like, how do we communicate to each other what level of diligence we've taken for our security? And this week in Japan, I had a number of people say, like, how do I know? Like, should I have had my money at Bitflyer or CoinCheck? And people feel just kind of lucky if they had it at Bitflyer and unlucky if they had it at CoinCheck. The fact is you have to have a PhD in computer science to kind of dissect this stuff. So we need standards that allow us to have a communication vehicle for it, where companies can have attestations done, which confirm what level of depth they've gone to on security. But I think also more importantly, this may very well be an enabler to adding the other types of layers that we're familiar with. So in our non-digital world, we have insurance. We have layers of protection. We have counterparties that are able to take on part of the risk. We have layered systems between the exchanges and the brokers where each has a different role. But how do any of these companies trust each other? How do underwriters get comfortable with a service if we're not able to define what level of security is in place? Anyway, so we hope that the CCSS can be a critical part of starting to get there. I think it can enable safer working between counterparties. It can also enable things like insurance. All right, so this is kind of a rehash of most of that. I think one last point here is that the bullet next to the last, which is reducing risk by decoupling of service. So the entire industry grew very quickly, digital currency industry. And the exchanges that emerged first, they didn't want to take deposits of Bitcoin, but they couldn't go to a bank. So if you look at exchanges and how they operate worldwide, exchanges don't typically hold asset. There's a layer of brokers and dealers, there's a settlement and clearing process, and there's banks that help along the way with those phases. But for anyone that started a few years ago and said, hey, I want to trade crypto, there was nowhere to store the crypto. So of course they had to take it on as their own function. And in fact, that's what they do even today. Separation of these duties, where you've got the traders that do trading, they love to trade, they're good at trading, they're building better trading systems all the time that scale and go faster. It's a different function than holding the asset, settling the asset, etc. So even using just some of the metaphors that we've had in the past for other assets will greatly assist. But this doesn't have to be a revert back to the existing banking system. You still have blockchains that provide transparency like we've never seen before. When you put your money in a bank, you hope they have it, but you can't actually see that they have it. But when you put it in a blockchain-backed bank, you actually can. Additionally, by use of creative uses of multi-sig, we can make it so you actually have a hand in every transaction, so the bank can't move that money unless you absolutely know about it. So these are differences from the new digital world that didn't exist in the traditional banking world. So that's about it. That was pretty fast and pretty low level. So happy to take any questions.
Okay, well, thank you very much. Very enlightening. We'll take questions from the floor. But may I ask you one quick question myself first, which is, What is going to be the chief utility of cryptocurrencies in the future? It's obviously not for supermarket transactions, so where is it? Secondly, when you talk about securitizing assets and so on, why can that not be done by existing financial techniques? How does Bitcoin or the other cryptocurrencies offer an advantage in digitizing assets? Sorry. So if that's...
Sure. All right, so for the first question, you asked, what is the ultimate function? So,
the chief function, as you see it in the future.
What is the chief function? I think the most fascinating part of Bitcoin is that it opened up our eyes to the idea that money is not just that stuff the government gives you. We can actually create digital forms of money that have rules and properties that are different than anything we've seen before. If you look at the history of money, we've used a number of different elements for trading value between each other. And when we find a new way to do it that's better, we have switched. So digital currencies open our eyes to the idea that we get to define this. And in just the few years since Bitcoin was invented, we've had literally thousands of new coins follow suit. Now, most of those are not very innovative. Most of them are kind of cloning the same technology. But several of them are starting to offer new innovations. And I don't think we're done seeing the innovation by any means. But just as examples, Ethereum came along and introduced the idea of smart contracts, and they're working towards that. We've got Zcash and Monero, which found new ways to keep things private, and they're working towards that. We've got Ripple coming along trying to create a new interbanking transfer system. These are all innovative ways to think about money that solve different nuance of use case. So what's the ultimate end? I can't say I know, because the innovation is still ongoing. Today we're seeing, with the emergence, I think the primary use case is speculation. Speculation isn't something that can last long term, in my mind. So we have to find utility. There will be coins that emerge for payment systems. There will be coins that emerge for securitizing assets or holding value long term. And there'll be other coins we haven't even thought of yet. What was the second question?
Well, digitization of assets. How do cryptocurrencies specifically help the digitization of gold or property or real estate? Or,
right. So one of the core properties of Bitcoin, Ethereum, Litecoin is what we call decentralization. So you can digitize something and you could give it to a single party, and they're in charge of issuing new asset, redeeming asset, trading, whatnot. But if it's a centralized party, there's all the risks that we kind of outlined under the services risk. Those risks are applicable. By decentralizing it, actually, there is no single party that's in charge. So for securing assets, you're right. You could digitize your house using a centralized party, and as long as they don't mess up, you'd be okay. But what we're enabling is a way to do that in a decentralized way that is impervious to all sorts of threats from your neighbors, from businesses, from governments, and that's never been done before.
Okay, questions for the working press first. Working press, yes? Are you working press? Yeah, sorry, of course, yes, come on, yes. Does it?
My name is Richard Susilo from Indonesia, journalist from Indonesia. Mr. Mike Belshe, you are CEO and co-founder of BitGo. So it means you have a company, but I could not find your identity on your company. Could you tell us when was established, where your base company in London, in New York, what about your paid-in capital, and others maybe information we could have from you. The question is about the cryptocurrency. What do you think on the future for the differentiation? I mean, is there a possibility that because of this cryptocurrency, the poor countries and the have country, the worst country will become more separated than right now because of this cryptocurrency? Is there a possibility for that one in the future? because of the development of this cryptocurrency?
Yeah, I think we start to get into both economic and political forces colliding. But we have seen over and over again that governments have a hard time stabilizing their monetary system. If you grow up in Argentina right now, you're facing more than 100% year-over-year inflation. Saving for your kids' college education, $1,000 this year is worth $500 next year, $250 the year thereafter. So what happens in these societies? Of course, they shift to using some other value store. Usually they shift to the US dollar today. And then the government starts to realize, well, wait, if everyone uses US dollars, we don't have any power. So the government gets mad and does something like ban the US dollar. So now you have a black market, and now you've got two different prices. What do the people do? Well, they keep using the black market because the currency that they've got is no good. It doesn't work. So I believe we will continue to see kind of the political economic fight happen, but ultimately digital currencies could be the answer. Digital currencies, one of the great things about them is that we get to set up the rules up front, and unlike humans, computers are very good at enforcing the same rules. So with Bitcoin in particular, we've kind of taken away the ability to change the rules, in other words, print more money, and we've put it into a set of algorithms for how it works. And everyone can look at it, audit it, and see it. And it gives us a scarcity of asset that we've never seen before, which is a very reliable type of currency. On the human side of things, you know, sometimes with the best of intentions and sometimes not with the best of intentions, people can and do screw up monetary systems. It's really just a matter of time. So taking those rules away from the humans in some respect can help establish stability all across the world. So I don't know how this is going to play out. I'm not an oracle, but I do think that digital currencies have an opportunity to help with global value store, even for the poorest of nations.
And there was the question about the origin of your company.
Oh. BitGo, we've been incorporated in the United States. We operate out of Palo Alto, California, which is just south of San Francisco. We are incorporated in the state of Delaware, and let's see, we're a profitable company now, but we raised $55 million over the last few years to pursue digital security. The investors are primarily Silicon Valley venture capitalists, prominently Valor Equity Partners recently invested with us. They're out of Chicago. And David Sachs, Bill Lee, Jeff Brody from Redpoint Ventures, and Stratton Sklavos, who was with Radar Partners, but formerly he was CEO of VeriSign Corporation.
Your date of establishment?
May, technically it's May 10th, 2011. I think.
2011.
Yeah.
Okay. All right. Sorry, there was another hand raised. The lady on the right first. Yes, you. Yes, you. Yes, go ahead.
Good afternoon. My name is Natalie Stucky. I'm an independent journalist. There are cryptocurrencies exchanges in Japan that are licensed and approved by financial authorities, and some are not. And CoinCheck, for instance, was not officially, they didn't have a license before they got attacked or whatever happened to them. Does that mean that exchanges are less likely to be targeted if they have FSA approval? And my second question is, Japan is a big playground sort of for Bitcoin and blockchain technology investments, even from foreign investors. Why did you decide to launch your business in Japan? What is it? What is particular in Japan that's attractive? And if there is again a sort of accident happen again under Japanese jurisdiction, do you think, despite the new rules and the new regulations, Japanese police authorities are able to conduct a real cybercrime investigation? And do you think Japan did a good job with Mt. Gox? And you said that Mt. Gox didn't have any money to begin with, but could you elaborate a little bit more? Okay. And my last question is, are ICOs illegal globally? Thank you.
I think I need a pen. Let's see. So the first question was, being regulated, will that prevent these? We live in a global economy, and the exchanges around the world are subject to global attack. Being regulated by the FSA or not is not going to change your vulnerability to being attacked. So no, I don't think that's an interesting factor. I think where regulation can help is, obviously best practices aren't being employed as well as they should be. Regulators may be able to help make that better. Obviously the danger with regulation is going too far and stifling innovation. One of the things that we've talked about, which I personally am in favor of, is an idea that exchanges that have assets which are below a certain threshold may not be subject to regulation, but then maybe once you achieve a certain size, you should be. So you might draw that line at $100 million, I don't know where. But as long as this is transparent and publicly disclosed to their consumers, I think that could be a good way to bridge the gap between keeping innovation strong and yet also when companies do get to a certain size, you need to be taking some extra care. All right. Second question was why Japan? Digital currencies are taking off globally. We've seen many countries and governments take different stances on it. Obviously in China, it's now been fairly well locked down. Those of us in the industry think this is somewhat of a badge of honor. Google, Facebook, and now Bitcoin has been banned. So we must be doing something right. But Japan has actually been pretty welcoming of finding ways to make digital currencies work. I think the motives are mixed in the country. Sometimes it's because they think there's an opportunity to change the economic status. Sometimes it's because there is a belief that these are great innovations that can change the way finance works globally. Other times it's a defensive position, right? Like we don't want to have another Mt. Gox or now another coin check in Japan. But nonetheless, the result is the same, which is we've got a regulatory environment that's really looking at how do we make this work. And so that's very attractive to us. BitGo's been working on security for, I think, longer than pretty much anyone, and we would like to help.
Yes, sorry, does that answer your questions?
Yes, but what do you, if another Mt. Gox, another coin check happens in Japan, on the Japanese jurisdiction, do you think the Japanese cyber crime police is
right? Okay. First off, another breach will happen. We just aren't a mature industry yet, so it will happen. Really, the question is, how bad is it? We do have all the tools and all the knowledge for how to limit it to a small amount that would not be devastating to anyone. However, obviously we aren't deploying those solutions yet. So be braced for it. It's going to happen. It's still a risky business. But the good news is we can fix that. Will they be able to find where the funds went? So far, the investigators have not proven very successful at chasing down the folks that perpetrate these crimes. I don't think that's going to change a lot. However, my gut instinct is that we're not any better on the fiat side. I know that in the United States, phishing happens on the US dollar side on a daily basis, thousands of times. I've spoken to the FBI directly about it. Basically, unless you're talking about millions of dollars, the FBI does not have time to investigate. I believe this is true in pretty much all jurisdictions. So the thieves have learned that they can just exist at this sort of sub-$100,000 level and do it all day long. And in fact, that's why we're seeing mass phishing attacks kind of all over the globe. These are probably organized by a very small number of players, and yet they happen all the time. So I'm not sure that digital currency is any worse shape than fiat. And in the long run, it may turn out to be in better shape. Unlike fiat currency, which does not have a transaction history, digital currency does, and it's permanent and it's forever. So one of the dangers that we on the decentralized world worry about is if you're in possession of stolen money, it doesn't matter if it was stolen directly before you got it or 5 hops before you got it, you owe it back to the original owner. So if the blockchain someday proves that you received a payment, you know, and who knows, maybe 15 years prior it had been stolen from someone, our laws don't specify whether that has to be returned to the owner. This affects a property of money we call fungibility. If funds are stolen and now they become tainted, then they are no longer fungible with all other coins. So this is an unanswered question on the regulatory side, legislative side of what is money and what is stolen money. Hasn't really been an issue yet. I think it's too new, but these are interesting questions. All right, and lastly, you asked about ICOs. Are they legal? I'm not an attorney, so I can't answer that question. The case precedent isn't strong enough, even for the attorneys, to fully answer that question. The SEC, as you know, I think just 2 weeks ago, said that they believe that pretty much all ICOs are securities in the United States. So if you didn't register your security, that is an illegal activity. But we haven't seen any significant enforcement. There are a couple of enforcement actions, but there hasn't been anything significant yet. I think we will find out from the regulators shortly.
Okay, good. Right, the lady on the left. Yes, please. On my left, that is.
Hello, I'm Min Zhang with Bloomberg. After all these security steps are put in place with different parties coming in, will transactions be faster than existing systems done by Visa and existing credit card companies? I believe they are still slower, and with the problem of the growing blockchain, right? And my second question is, as we build this more secure system with different companies, you showed us the diagram of 4 different layers of companies coming in. Doesn't it, in the end, undermine the whole idea of decentralization? Aren't we just basically shifting power from one to the other?
Okay, great. So will transactions be faster? If you are talking about buying coffee with your Visa MasterCard, no, probably not faster than that, but that's a $3 transaction. Now, it could be that future innovations in digital currencies change this, but at least right now, digital currencies are absolutely slower than that. On the other hand, if you want to move $100 million from here to Beijing, it's going to be way faster. It already is way faster. So anyway, there's different types of purpose for how you would transfer. Because we're in a global economy, I can see real need to be able to pay a supplier on a Sunday night abroad and needing to get that payment in now in order to have manufacturing start tomorrow. Assuming that business values that use case, that speed of money internationally, then yeah, we're going to have digital currencies make that happen. In terms of undermining decentralization, decentralization is not a Boolean on or off. It's not like you're centralized or decentralized. It's actually a spectrum. On one hand, you have completely decentralized, and that's got a set of properties. And on the other hand, you have completely centralized. What we can move to is a place in the middle where you have both. So it's decentralized in that you'll have choice of provider, you'll have transparency of funds, you'll be able to have a key or participation in every transaction, but you may be relying on certain centralized parties to also hold keys or to also police or set policy, etc. When we talk about small amounts of money, it's really easy to get excited about full decentralization. I want my $100, my $1,000, heck, maybe even my $100,000 completely under my control. But when you're talking about millions of dollars, do you really want to have that in your house where you have sole responsibility for it? Do you hire an armed guard? Do you put bars on your windows? How do you keep that secure? How do you protect it from fire? These are all real issues, and so you need some amount of professional parties to help. The other thing is the example of business and asset managers that I mentioned. the fact is that we have a number of financial products, ETFs, mutual funds, et cetera, and these are managed by people that we trust to handle our investments wisely. Those parties are centralized parties to some degree. Do you want them to be holding the asset directly, or do you want them to be able to hand it to someone else? Anyway, regardless of all this technology, I think we end up somewhere in the middle. It's way better than what we have today, which is centralized only, but not fully decentralized for everything.
Sorry, I think the gentleman behind you, you had your hand raised before? No? All right, well. Okay, go ahead.
My name is Tim Horniak. I'm a freelance journalist here. You talked before about the decentralized aspect of cryptocurrencies. So we've seen some growth in the number of decentralized exchanges. And if I understand correctly, these exchanges allow users to exchange cryptocurrencies anonymously. This would include stolen funds. So maybe two questions. Number one, how do you see the growth of these anonymous or decentralized exchanges affecting the overall security picture for cryptocurrencies, including Bitcoin? And number two, more general question. When Bitcoin first started making headlines, part of the idea was that everything is permanent. There's a blockchain. It's traceable. And yet, as you just mentioned before, we've had these incidents in which Bitcoins have disappeared and they can't trace them. They somehow elude the probes of investigators. So that seems to be a contradiction. Are these things really traceable forever? And if so, why can't we find those stolen funds? Thank you.
Sure. So first, question about decentralized exchanges. There's a new technology around a type of exchange called a decentralized exchange. And the idea is that instead of having isolated exchanges with a centralized order book, so for instance, there's a trade matching that happens on CoinCheck, which is independent of Bitflyer, each of them operating their own centralized order book. A decentralized exchange creates a mechanism whereby everyone can participate in a decentralized way with that order book. These technologies are really new. I think they're very exciting. It's a little bit early to say quite what's going to happen with them. I don't think they necessarily change the anonymous properties, actually. It's true if you're trading crypto to crypto, which is primarily what they do on decentralized exchanges today. In fact, I don't think there's any decentralized exchanges that yet enable trading of fiat to crypto. Crypto to crypto can seem more anonymous, but as these things move under regulation, there's technical ways to make it so it's not anonymous. I think pseudonymity is often confused with anonymity, and regulation already requires people to identify, participate with KYC, AML. So you're not going to be able to have those decentralized exchanges participate with traditional finance unless those problems are solved. And technologically, we can solve it. That's not an issue. It's just brand new. So I hope I answered your question there. Second, about traceability and immutability and being a contradiction with law enforcement. I don't think it's a contradiction. The transaction history is there. What happens, when with a bank robbery for cash? We hear about like marked $100 bills. What are those, right? That's where they know which serial numbers are in the bank, so that if those show up somewhere else, maybe someday you'll be able to realize, that was the stolen money from the great hack or the great theft of 2005. It doesn't work perfectly, right? Unless somebody shows up at another institution that's checking for those numbers, you can still use that money between individuals and not get caught. So none of these systems are perfect. With the stolen money that's happened, we've seen everything from it just be left on chain. We can see it there. You know exactly what wallet address it's in, but you don't know who holds it. Unless they go to some regulated exchange and try to convert it to fiat, you may not know who holds it. So anyway, I don't think it's a contradiction. It's just a matter of fact as to how the technology works.
3 questions. I'm AP, Ayuri Kageyama. When you talked with the FSA, what kind of feedback did you get, or reaction? Were they interested in like hiring you or not? And also, you said that there may be 3 motives for why Japan was so bullish on cryptocurrencies. And in your opinion, what do you think is in it for Japan? Are they making a good choice to be bullish about it and start to regulate it? And if there could be some kind of backlash for being a front runner, what would that be? And also, my third question is, after listening to your presentation about how your service works, I thought the whole point about Bitcoin and cryptocurrency was that you don't have to go to bank teller, and it's like very expedient and fast and transparent and all that kind of stuff. But if we have to call you and find out, is this a real transaction? I mean, what are the costs? How much of how does your business model work?
Sure. All right. So first off, on FSA, do they have feedback? They had a number of good questions. I mean, I'm impressed that they are. They're very thoughtful about the space and what needs to be done. A little bit transparent, opaque to me as to what kind of their next steps are. So I don't have I don't have a very good answer for you there. Sorry. On the motives for Japan. Let's see. There were a couple things I was referring to. One of the motives is not to have an embarrassing hack. Right. My understanding is that in general the feeling is that digital currencies are unstoppable. They're going to happen, and maybe if regulators don't step in and do something, there's going to be another Mt. Gox, another CoinCheck. With CoinCheck, we're very lucky; they have enough capital reserves to cover the losses. But what happens if next time that doesn't happen? So one reason I think is making sure that it doesn't happen again. And I think the Japanese regulators are being forward-thinking in trying to figure out how to embrace to help in that. The second thing is being competitive in the global economy. So Switzerland, in particular, has also indicated that they want to be a forward-thinking in the cryptocurrency space, in particular around ICOs in that case. But I do believe that there's a real interest here in Japan as potentially being a global leader, assuming this takes off. And the third one, I've forgotten what I was referencing earlier. So,
what value is that? Can you repeat the third question again?
Well, the third question is about the cost of this service and how that's better than regular money. But when you say it's like they're going to be a global leader, I mean that's pretty abstracted. I mean, is there really an advantage to being a global leader? You can be crashing right into disaster, right? I mean.
Well, if you think that it can't be predicted, then you're right. I suppose you could be crashing in disaster. But well, wouldn't you like to be the world's reserve currency? So the U.S. dollar today enjoys a very strong position globally, because the U.S. is able to export dollars all around the world for purposes that probably doesn't even need to be U.S. dollar. Oil is largely traded in U.S. dollar, et cetera. So being the reserve currency is a huge advantage. If it turns out that the majority of digital currency, banking, exchange, and trading happens in Japan, that means that all is happening here, right? So that's, I think, a huge thing. You're right. Obviously, if we can't overcome these failures, then both of those 2 bullet points are missed, right? So is there you asked also, would there be a backlash or problem from being a first mover? I think these problems are solvable, so I don't think there's going to be a backlash problem. I think actually being the first mover is going to mean that the largest institutions grow up right here.
Okay, thank you very much.
She had one last thing. She said, isn't the point not to be a bank? Real quick, BitGo is doing business-to-business products today, not consumer products. So I personally believe that if you're storing hundreds of millions of dollars today, you're looking for folks to help you store that. So we charge a small amount on a per transaction basis. If you're just holding it in cold storage, it's a small amount kind of on a monthly basis. It's not dissimilar from other custody arrangements that you'd have for other assets.
Can we take one more quick question?
Yes.
Gentleman over there, yes, please.
Actually, can I, some dumb questions. First of all...
Not too many, please. We are up against time.
What's the advantage of crypto over a
identify yourself first.
Smith, Nicholas, CLSA. What's the advantage of crypto over a normal digital? So, for example, Japan's bringing in J-coin and MUFG coin related to fiat. We've got a possible attack from Alipay and WeChat Pay. Why the heck have crypto? They're expensive to trade, and the volatility is absolutely enormous. Two really stupid question, but is Japan a soft touch on this? The allegation is that FSA has been soft on it. Not suggesting I agree. And you made some interesting comments on fractional reserve. I wonder whether you could expand.
Okay, so first, the primary advantage of most of the crypto blockchains is decentralization. So certainly we could have PayPal, Alipay, pick your favorite, or even the Japanese government issue a token. You are at their mercy in terms of how the value of those coins is inflated or deflated, whether they track it properly, whether they decide to just shut down, whether you can redeem those coins for value later. So that's the main thing. Second question, is Japan soft touch? I don't really have an opinion there. I think all of the government folks that I've worked with over the past several years, they don't want to just ban it. That would be an easy way to deal with things, right? Just get rid of it. I suppose China may be closest to taking that stance. But there's a belief that there really is value here. So they don't know how to address it. They don't want to stifle it. And they're being conservative and cautious. This is early days. I mean, I think we all, as potential investors in these currencies, should be cognizant of the risks. There's definitely a herd mentality that can happen when folks jump in en masse, but that is unwise. All right, and then third, on fractional reserve. So the reason I accused Mt. Gox of having fractional reserve is actually based on the pretty strong evidence at this point that the funds at Mt. Gox, which were supposed to be held at Mt. Gox for at least a period of a year, were not there, and that the owners knew it. So they were in a fractional reserve capacity. All of their users expected that, hey, I have 1 Bitcoin, there is a Bitcoin in your wallet. But in fact, the sum of what the users thought they had and the sum of what the exchange actually had was not the same. So that's what I would call a fractional reserve. There's an interesting difference between custodians and banks here. When you take deposits and lend out the money, you are in a fractional situation. Today, all of the exchanges in digital are expected to be 1-to-1, no fractional reserve. We'll see if that continues. I think as we do get the security issues solved, as we're able to define who's taking the right security practices, as we build financial services on top of this, we will see fractional cases, and that's perfectly healthy. There's great products to be built that way, but obviously the underpinnings have to be there before you can move to those levels.
Okay, thank you very much indeed. We've come to the end of our time. Thank you for giving us the benefit of your specialized knowledge. We're all
thank you.
Somewhat wiser. You're going to be coming to Japan again many times, I'm sure.
I will be back.
Let me encourage you to come back to this club. This is a 1-year honorary membership.
Oh, thank you.
Please come and join us again, talk to us again. Thank you very much.
Thank you.